Hey everyone, welcome back to Corporate Decoder. Today, MBRX just filed a proxy statement for their annual meeting, and I'm seeing some really interesting moves that matter. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is proposing a reverse stock split and a big equity increase, which signals they are trying to boost their stock price and keep operations funded. Alright, let's dive into this filing from Moleculin Biotech Incorporated. This document, called a proxy statement, is basically a company's official communication to its shareholders about upcoming important votes. The big news here is that Moleculin Biotech Incorporated is asking its shareholders to approve a few key things at their upcoming annual meeting. First, they want to re-elect their board of directors. This is pretty standard for annual meetings, ensuring the company's leadership has shareholder backing. They are also asking to approve their auditor for the upcoming year. This is like getting a stamp of approval on their financial record keepers. Now this is where it gets interesting. They want to increase the number of shares available for their stock incentive plans. Think of this as giving the company more stock options and awards to offer to employees and executives. And the headline grabber, Proposal 6, they want the authority to do a reverse stock split. This is a pretty big deal for a company. Basically, they are asking for permission to combine existing shares into fewer, more valuable shares. They want the flexibility to do this with a ratio anywhere from 1:2 all the way up to 1:20. The board will decide the exact ratio. Why would they do this? Well, the filing makes it pretty clear. Their stock price is currently below $1. Nasdaq, the stock exchange where Moleculin Biotech is listed, has a rule that stocks must trade at or above $1 to stay listed. This reverse split is a direct move to try and meet that requirement. And it is not their first rodeo. They mentioned they've done this before. On the 22nd of March 2024, they did a 1-for-15 reverse split. And then again on the 1st of December 2025, they did a 1-for-25 reverse split. Historically, these moves haven't kept their stock price above the $1 mark for long. Let's look at the numbers. As of the 19th of August 2026, they had about 19.5 million shares of common stock out there. If they go with a 1-for-10 reverse split, that number would drop to around 1.9 million shares. Now, remember that proposal to increase their equity incentive plan shares. If approved, they would have about 3.9 million shares available for grants. That is a pretty significant chunk, suggesting they plan to use stock as a key part of their compensation strategy, especially if they are trying to conserve cash. They're also asking for the ability to adjourn the meeting if there aren't enough votes to pass these proposals. This gives them more time to convince shareholders to vote their way. Looking at how shareholders voted on executive pay last year, about 63% approved it, which they noted was lower than expected. They tried to reach out to major shareholders to understand concerns, but didn't get direct responses. Despite this, they are planning no salary increases or bonuses for executives this year until they secure more financing. This suggests they are trying to be financially prudent, but also rely heavily on stock grants to keep their executives motivated. Their board members are getting paid. For example, in 2025, John Climaco, who chairs the compensation committee, received over $76,000 in cash, plus stock awards. Elizabeth Cermak, who serves on the audit and nominating committees, got around $56,000 in cash plus stock. And the value of those stock awards for directors can be quite significant, with figures like over $58,000 in option awards, for most of them in 2025. The audit committee, which includes Robert George, John Climaco, and Elizabeth Cermak, reviewed the company's financial statements. They seem to be overseeing the financial health and reporting closely. Grant Thornton LLP served as their auditor in 2025 and 2024, with audit fees totaling over $614,000 in 2025. This is a substantial amount for a company of this size, showing their reliance on external audit services. Now, let's talk about the financials, and this section is quite telling. The filing shows a massive drop in total shareholder return. A $100 investment back in December 2022 was worth only 83 cents by the end of 2025. That is a near total loss of value for shareholders. For their principal executive officer, Walter Klemp, the compensation actually paid also shows a big swing. It dropped from over $1.4 million in 2023 to just over $339,000 in 2024, then back up to about $722,000 in 2025. This is heavily influenced by the value of stock awards, which fluctuate with the stock price. Their net loss has also been significant, over $29 million in 2023, $26 million in 2024, and over $33 million in 2025. As a clinical stage biotech company with no product revenue, this is not entirely unexpected, but it highlights the financial pressures they are under. Let's look at the potential impact of that reverse stock split on their share count. With 19.5 million shares outstanding now, a 1-for-10 split would reduce that to just under 2 million shares. The goal is to push the share price up, For instance, if the stock is trading at 60 cents, a 1 for 10 split would theoretically make it $6 per S-share. The company believes that a higher stock price will make their shares more attractive to larger investors and funds, which could improve trading liquidity and potentially lower trading costs. They also mentioned that lower price stocks can have higher brokerage commissions as a percentage of the trade. A higher share price could make trading more cost effective for some investors. However, there are clear risks. They admit there is no guarantee the higher price will attract investors, improve liquidity, or even last. History shows that reverse splits don't always solve underlying business issues. In fact, about half of microcap companies that do reverse splits eventually get delisted. This is a significant risk, similar to what we saw with companies like Sears or Radio Shack in their pre-bankruptcy phases. They also plan to handle fractional shares by paying cash, not issuing new shares. This means some very small shareholders might end up with just cash instead of stock, potentially pushing them out as owners. Going back to that equity incentive plan, they are requesting a substantial increase in shares. This is a common strategy for biotech firms that rely on stock to attract and retain talent while conserving cash for research and development. This request alone adds nearly 4 million shares, which would represent almost 20% of their currently outstanding shares. This is a significant dilution if you are a current shareholder. They also have a non-binding vote on executive compensation. While it does not legally bind the company, shareholder sentiment on pay is clearly important. Given the past vote results and their plans for no salary increases or bonuses this year, it seems they are trying to address shareholder concerns about pay, especially in light of the company's financial performance. So, what is the story here? Moleculin Biotech Incorporated is in a tough spot. Their stock price is too low to meet NASDAQ requirements and they need to raise capital and fund operations. They are proposing a reverse stock split to try and boost the share price and a large equity grant to attract talent and conserve cash. The biggest risk I see is that, historically, reverse splits on microcap companies often do not solve the underlying business problems. While they are trying to meet listing requirements, the massive dilution from the equity plan and the potential for continued share price decline after the split are major concerns for shareholders. What I am actually looking for is whether these strategic moves will translate into actual operational improvements and product development success, which is the only long-term solution for a biotech firm. Alright, that is our breakdown of Moleculin Biotech's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time. That is my take. Stay decoded.